Ed Keon, portfolio manager of Quantitative Management Associates, expects the market in the second half of 2012 to be similar to the first half, choppy.
I think the U.S. equity market will end the year higher than it is today, but I think with a lot of ups and downs along the way. I think 1310 is the wrong level for the S&P, but I'm not sure whether the right level is 1500 or 1100, or whether even if it is 1500 over the next couple of years, we might hit 1100 along the way. So I think there's a high possibility of shocks hitting out of Europe or out of China. So I do think we'll continue to have choppy trade this year.
In that type of environment, you need to be diversified.
Well, we're trying to stay as broadly diversified as we can in the portfolios that we manage. So to the extent that people have not just stocks and bonds, or within the bond market, high yield bonds, or within the stock market, international equities, emerging markets, but also commodities, real estate, even positions that are designed to hedge, like a long position in VIX futures is a way of trying to hedge some of the risk in the portfolio. So we're trying to stay as diversified as we can. Even assets we're not big fans of, like U.S. Treasury bonds, play some role in the portfolio because of the diversification they provide.
So how should you allocate your assets and diversify appropriately?
We are very close to client benchmarks across the board. We were very aggressive early in the year, and we had a very good first quarter, and we've been basically playing defense since then. So we're trying to hold on to the gains we made in the first quarter and play this volatile market as best we can. We're relatively underweight international and a little bit overweight U.S., so that we're roughly equal to the overall equity benchmark. But within that international, we still are overweight emerging markets. And it's not so much a timing call, but a long-term belief that that's where you're going to get the best growth and best returns in the long run.
While he is overweight emerging markets, Mr. Keon says there's also value in some European companies.
I do think there is a situation setting up in Europe where there's tremendous value being created in some of the great global companies that are headquartered there, which have been dragged down along with their overall broad markets. So I do think there's going to be a tremendous buying opportunity to buy some of those world-class companies. I'm not quite ready to step up and do that right now.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to